Hey, what's up guys? John here. The Walmart family is liquidating tons of stock, and many other billionaires are doing the same thing.
Billionaires and CEOs are unloading stock and at an increasing pace.
The Walton family selling $4.5 billion worth of Walmart shares.
We saw a very similar trend in 2021 when Mark Zuckerberg and a lot of tech CEOs were unloading tons of stock. I mean, the CEO of Microsoft at that time sold over half of his entire stake in Microsoft at the height of the market. You saw many CEOs stepping down. A lot of people had many excuses and reasons why they needed to sell off everything. But now we're seeing a very similar trend.
America's top billionaires selling over $9 billion worth of stock just this year.
But the general public thinks the market's going to be completely bullish over the short term. They think the housing market's going to be great. They think everything's going to be great. But when in history have the masses ever gotten rich? Never. It's always the people that are smart, that move against the masses, that always think against the trends, that always do extremely, extremely well. Well, in this video, I'm going to break down some really startling facts about what's really happening in the economy so you can see things very, very clearly and not be confused by what you'll see on social media about an endless bull run in front of us. Please hit that like button. When you hit the like button, YouTube's going to share this content to educate more people about what's really going on in the economy. So, Robbie Walton, Walmart, 1.1 billion in stock liquidated. Alice Walton, 1.1 billion. Jim Walton, 1.1 billion. One of the co-founders of Airbnb, $890 million. These are all positions that they've just liquidated. I mean, Larry Ellison, $850 million. $850 million. Another Oracle employee, $470 million. You had this company that absolutely crushed it the last couple of years, $300 million liquidated. Apollo Management, $210 million. More Walmart. Like the entire Walmart family is just dumping tons of stock. I mean, the Salesforce CEO, $110 million. $110 million. So all these company CEOs, executives are liquidating their positions. You have to ask yourself why. Why would they do that when they could simply get a loan out against their portfolio at 2% or 3% interest? I mean, if you were a lender, you would love to lend money to the Walmart family because it doesn't get any safer than that. You know you're going to get your money back. And the only reason that they would not do that, and instead they choose and opt to sell, is because they believe that the market could potentially fall in a very, very big way, then ushering in a margin call where they'd have to sell that stock at a very low price point to make good on their loan obligation. That's why they wouldn't do that. But look at this. And also, today's video is sponsored by my company, GreatCreditFast.com. That's GreatCreditFast.com. If you'd like to fix your credit to position yourself for the greatest wealth transfer of all time, we'd love to give you a free strategy session at GreatCreditFast.com. Look at this. Microsoft, they're planning to lay off 10,000 employees. 10,000 employees. Now, for context, 2023, so far this year, we've laid off 216,910 employees in the tech sector. All of 2022 is 164,709 employees. If you simply do easy math, it's 52,000 employees that have been laid off in addition this year than all of last year. Now, we still have about 5 months left in this year, and we're going to likely see Jerome Powell continue to increase interest rates in the short term, which is only going to put further pressure on these tech CEOs and tech companies and other companies to reduce their overall expenses, issue further layoffs, and find ways in which they can cut costs. That's what they're going to have to do. Well, look at what they just said. Inflation arrow may be pointing in the right direction, but the Fed has clearly communicated they believe the risk of being too dovish outweigh the risk of being too hawkish. Rates are going up. But if you go on Twitter, everything is buy, send it. Everyone's so bullish. Everyone thinks that everything's going to be so great. How? I mean, we look at the real estate market. The real estate market's booming, and it blows my mind. It really blows my mind because the U.S. 30-year fixed rate mortgage top 7%. Now, that's if you're a borrower with, if you have an 800 credit score or 850 credit score, you're perfect credit, really strong financials, really, really strong docs. Everything is just a perfect file. Sure, maybe you would get a 7%. Maybe you would get that 7%. But for most people that have a 698 average credit score in America, they would get an 8.14%, or maybe a loan officer might be able to find an 8% mortgage or 7.9%. If you have a slightly above average credit score, it's 8.022% for the mortgage rate. That's extremely expensive. Many people can't afford that. At least that's what I would think. But yet almost half of May's sales were above asking price, up from 25% in January. Now, when you look at this, what are people doing? People are looking at adjustable rate mortgages. They're betting their entire livelihood that rates are going to go down next year or this year. They're betting everything's going to go down to be able to refinance it then. Well, if they don't, they're completely screwed. They're betting everything on it. It's crazy. Everyone's leaning into these adjustable rate loans. But look at the numbers here. Average price of a home in California, $737,900, right? If you were to buy it with an 8% mortgage, $737,900, with a 10% down payment, you're looking at $5,919 a month in just your payment. And then you have to factor in landscaping and being a property owner with repairs, things go wrong. You're looking at $6,500 a month. You need to make 20 grand a month just to be able to afford the average home in California. 20 grand a month, $240,000 a year, and that's net income. That's net income. So you got to make more than that, especially living in a high tax state like California. So you start to look at this, like how can anyone afford that? Really, how can anyone afford that? And then you look at this that I reported on yesterday, but you connect the dots here. New study reveals big banks have $205 billion in losses. So you have Bank of America, yet Bank of America stock is soaring. How? How is Bank of America stock soaring? Wells Fargo, Wells Fargo stock is going up. Then you have JP Morgan Chase. JP Morgan Chase, stock is going up. Then you have Citigroup. Citigroup, stock is going up. Everything is just continuing. Like, how are bank stocks going up when they have to refi $1.5 trillion in bad commercial loans in the next 18 months? We've had a series of bank failures, regional banks, over the last 4 months, with many, many more problems ahead. How? How does that make any logical sense? When we start to connect the dots here, banks are in much, much bigger trouble than they lead us to believe. With rents continuing to fall, it puts much further pressure on their loans that they've issued on these commercial properties. For example, in Las Vegas, rents have already dropped 6% so far this year. In Riverside, another 5.9%. Phoenix, 5.7%. Austin, so far this year, 5.6%. Tampa, 4%. Charlotte, 3.5%. Atlanta, 3%. Denver, 3%. Seattle, 1.8%. Virginia Beach, 1.6%. Now, investors buy these deals based on a 4, 5, 6% return usually. And so they're buying it at a 4, 5, 6% return. Rents are dropping 4 or 5%, meaning that they're operating these buildings at basically a loss. And they, at that time of acquisition, many of them had a 3% or 4% mortgage. Now it's an 8% mortgage. These lenders are in big trouble, and the clients that they've lent money to are even in bigger trouble. But what are these clients going to do? They're just going to hand the keys back to the bank. The bank's going to be suffering these huge losses. But yet, people don't talk about it. People are like, okay, everything must be fine. But yet, Capital One posted a 60% profit drop in Q1 as credit card defaults mount. You type in credit card defaults up here, it says, how to protect your finances against a future U.S. default or government shutdown. I don't see what other people are seeing in the market. Negative equity surges. Millions of Americans now underwater on auto loans. Biden has a plan for student loans. The plan for student loans is that if you make far below the U.S. poverty line, you pay basically zero. So they're penalizing you to produce value in the economy, and they're going to offset the cost to the everyday American consumer. And so this is the trend in which we're going in. And wages continue to fall. Since President Biden took office in January 2021, the increase in prices due to inflation is over 14%, resulting in a loss of wages of nearly 4%. So you have real wages completely falling. You have home prices soaring. You have the cost of debt tripling. You have consumer debt at all-time highs, $1 trillion in credit card debt, $1.6 trillion in auto loans, $1.7 trillion in student loans. You start to add all this together. Consumers are in a worse position they've ever been in, with less money in the bank than they've ever had, in at least in the last 40 years, right? You're talking like 1970s range. So you're seeing a huge, huge problem. But if you go online, everyone's talking about the housing market. Everyone's saying it's a great time to invest. I see a hell of a lot more downside in the housing market than I do upside. And the only way I'd buy a real estate deal right now is if the deal was absolutely smoking. It was an absolute incredible deal for 50 cents on the dollar, offered an incredible opportunity. I mean, it would have to make so much sense. But if you look at the smartest people in the room, what are they doing? They're doing the opposite of what the general public is doing. And that's what they always do, and that's why they are who they are. That's why they're extremely wealthy, because they move against what the general public is doing. What do you think about this situation? The inflation report, what do you think about rents falling? Where do you see this all going? I think we're stepping into the greatest wealth transfer of all time. I think it's going to be way bigger than 2008. Way, way, way bigger. 2008 was simply a housing situation in America. This is a whole global problem. We're seeing these problems pop up in locations all around the world. in different capacities, different forms. Look at Canada's interest rates. You look at what's happening in Britain. You look at all these things. There's big problems coming, and a massive wealth transfer that's going to be right in front of us. What do you think about it? Drop below. Let's have a conversation about this because it's absolutely crazy. I think we're going to see many people make an absolute fortune. Many people make millions and billions. And probably even the world's first trillionaire will be created in the next 5 or so years. We're going to witness something very big. It's going to be the haves up top. It's going to be the have-nots down below. And the have-nots are going to be greater than ever. And the haves are going to have more power, authority, and freedom than ever. So be very strategic with how you're investing your money and position yourself so that if you do see an incredible opportunity, you can pounce on it. The big problem is that many people, they'll leverage themselves too much in a fake market, and then when things turn and they really want to be able to have access to money, they can't. And they don't have the credit, they don't have the ability to get access to money, so they have to sit on the sidelines and just watch that opportunity go by. If you need help fixing your credit, we'd love to help you at greatcreditfast.com. Drop your comments below. Let's have a conversation about this. Add me on IG, and catch you guys in the next video.